What is happening, Bitcoin Bulletin faithful? Get ready for a rapid-fire update because the crypto world never sleeps, and neither do we. We're diving headfirst into a whirlwind of market-moving news that you absolutely cannot afford to miss. First up, the latest economic indicators are sending shockwaves through the market. Expectations for Federal Reserve rate cuts are surging, but here's the kicker. Bitcoin's price isn't playing along. We've got the inside scoop on why the market is reacting so strangely to these major economic shifts. And it all starts with that crucial U.S. jobs report. And speaking of massive players, the stablecoin giant Tether is making headlines. Rumors are swirling that Tether has been selling its Bitcoin reserves, but is it true? We're cutting through the noise to bring you the official word from CEO Paulo Ardoino and uncover the real story behind their alleged Bitcoin sales and their surprising diversification into gold. This is a move that could redefine their strategy and impact the entire market. Now, prepare to be amazed by a stroke of pure luck in the mining world. A solo Bitcoin miner just hit the jackpot, mining a block worth a staggering $347,000. We're talking about a massive payday for one individual taking on the giants. How did they do it? And what does this incredible feat mean for the decentralization of Bitcoin? We've got the details that will make you believe in the impossible. Finally, we're turning our attention to the big players holding Bitcoin on their balance sheets. NYDIG is sounding the alarm for Bitcoin Treasury firms, warning of increased volatility as premiums narrow. What does this mean for companies like MicroStrategy and Metaplanet, and could a wave of selling be on the horizon? You need to know this if you're invested in the space. All that and more, right here on Bitcoin Bulletin. Hit that like button, subscribe if you haven't already, and ring that notification bell so you never miss an update. Rate cut hopes soar, Bitcoin price stays cool. Get ready for a financial roller coaster. The latest U.S. jobs report has ignited expectations for a whopping 3 Federal Reserve rate cuts this year, sending major U.S. stock indices soaring. But in a twist that has everyone scratching their heads, Bitcoin's price has responded with a shrug, failing to capture the bullish momentum. Why is the king of crypto not dancing to the tune of economic optimism? We dive deep into the August non-farm payrolls data, which revealed a surprisingly weak 22,000 new jobs added, coupled with a rise in the unemployment rate to 4.3%. This slowdown is a stark contrast to earlier fears of an economic crisis that had previously propelled Bitcoin to record highs. Analysts are dissecting every angle, from the impact of AI stock downturns to the Nasdaq's dip, and the surprising exclusion of MicroStrategy from the S&P 500 index. Even the usually robust U.S. spot ETF market saw significant outflows, with BlackRock's IBIT experiencing its first outflow in 10 days. Ethereum is facing even tougher headwinds, with massive outflows from its spot ETF. The market is now anxiously awaiting crucial inflation reports, the Producer Price Index and Consumer Price Index, to see if rate cut hopes will translate into crypto gains. Will the upcoming inflation data finally ignite a Bitcoin rally? We're about to uncover the crucial next steps for Ethereum and its spot ETF market. Tether denies Bitcoin sale amidst gold diversification frenzy. The crypto world was set ablaze this weekend with rumors that Tether, the issuer of the dominant USDT stablecoin, had been secretly selling its massive Bitcoin holdings to pivot into gold. This speculation, fueled by YouTuber Clive Thompson's analysis of BDO attestations showing a drop in Tether's BTC reserves from Q1 to Q2, sent ripples of concern through the market. However, Tether CEO Paulo Ardoino has vehemently shut down these claims, stating unequivocally on X, "We didn't sell any Bitcoin." Providing crucial context, Samson Moe, CEO of Jan3, clarified that the decrease in reserves wasn't a sale but a strategic transfer of 9,376 BTC to a related entity, 21 Capital XXI, which is supported by Tether. This move is part of Tether's broader strategy to diversify its assets beyond just Bitcoin, with Ardoino confirming investments in safe assets like gold and land, describing it as a defensive measure in an increasingly darker world. This diversification into tangible assets, alongside supporting Bitcoin infrastructure through XXI, signals a new hybrid investor profile for Tether, aiming for enhanced resilience amidst economic uncertainties. Did Tether's strategic shift just set a new trend for stablecoin reserves? Next, a lone wolf in the mining world strikes gold, literally, with an unbelievable solo win. Solo Miner's $1 Million Luck, a $347K Bitcoin block. In a jaw-dropping display of fortune, an independent miner has defied the odds, successfully mining a Bitcoin block all by themselves and scoring a massive $347,872 reward. This incredible feat, achieved through the Solo CK pool service, saw the miner process block 913,632, earning 3.13 BTC amidst a block containing 593 transactions worth over $52 million. This isn't just a lucky break. It's a powerful statement for Bitcoin's decentralization, according to Peter Chung, head of research at Presto Labs. While solo wins are as rare as lottery tickets on the highly competitive Bitcoin network, this marks the second such success this month, following a similar windfall in September. The Bitcoin mining difficulty is currently near record highs, making individual wins exceptionally improbable. Arjun Vijay, founder of crypto exchange Giatis, highlights that while pools offer regular payouts, such solo successes underscore the network's inherent unpredictability and the beauty of its proof-of-work algorithm. Could this solo miner's success inspire a new wave of independent miners? We're shifting gears to explore the risks facing companies holding massive Bitcoin treasuries next. NYDIG sounds alarm. Bitcoin treasuries face mounting volatility. Are Bitcoin treasury firms heading for a storm? NYDIG analysts are sounding the alarm, warning that companies holding significant Bitcoin reserves, like MicroStrategy and Metaplanet, are facing increased volatility as the premium between their stock prices and their underlying Bitcoin net asset value, NAV, continues to shrink. Greg Cipollero, NYDIG's global head of research, points to a cocktail of factors contributing to this pressure. Investor anxiety over upcoming supply unlocks, shifting management objectives, increased share issuance, profit-taking, and a lack of clear differentiation among treasury strategies. This narrowing premium could trigger a substantial wave of selling by existing shareholders. NYDIG advises these firms to consider stock buybacks if their share prices dip below NAV to provide crucial support. While Bitcoin buying companies now hold a record 840,000 BTC, with MicroStrategy dominating holdings, the pace of accumulation has slowed dramatically. This slowdown, combined with shrinking premiums, suggests a potentially turbulent period ahead for Bitcoin treasury stocks unless proactive measures are taken. Will these treasury firms heed NYDIG's advice and buy back shares? That's all the news for today, but stick around for a lightning-fast recap and our full call to action. And that's a wrap on another action-packed Bitcoin Bulletin. We saw Fed rate cut hopes rise, but Bitcoin's price remained stubbornly flat. Tether denied selling Bitcoin amidst diversification rumors. A solo miner scored a massive $347,000 payday, and NYDIG warned of volatility for Bitcoin treasury firms. Don't miss out on any of these critical updates. Hit that like button, subscribe to Bitcoin Bulletin for more essential crypto news, ring the notification bell to stay ahead of the market, and follow us on all social media platforms to join the conversation. See you next time.